Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Lascelles, chief economist at RBC Global Asset Management, to discuss how the incoming Biden administration policies could impact the global economy, markets, and the United States' position in the world. Eric, it's great to meet with you. Welcome to Trade Talks.
Thank you so much. Pleasure to be here.
And let's get right into it. How will the incoming Biden administration impact the global economy?
Well, let's not expect a radical shift here. I mean, as much as the U.S. president is in some ways the most powerful person on earth, it's actually quite hard to legislate in the U.S. system, given chambers of Congress and so on. And so I would say, particularly if we keep this divided Congress, as looks likely, not a radical change in legislation, but probably at least a modest economic positive. And so some of that is just the Democrats seem more inclined to do more fiscal stimulus. And I'm thinking beyond the current efforts and into 2021 and beyond, I would say it's reasonable to expect some amount of re-engagement with the world, including perhaps more immigration. That's an economic positive, likely a little bit less on the tariff front. Not that Democrats are famous for trade-friendly policies, but probably a little bit less there, which is good from a trade perspective. And we wouldn't want to underestimate just the normalization of relationships with other countries. And so to me, that adds up at least to a modest economic positive. It's not the kind of thing that supercharges growth, but it's helpful. And of course, it's in the context of all these other things happening, hopefully a vaccine-led post-COVID recovery that should generate some pretty fast growth on its own as well.
And Eric, as market participants, we're always talking about the US-China relationship. Do you think that will be impacted either one way or the other with the Biden presidency?
I think so, in the sense that relations couldn't be a whole lot worse between the U.S. and China, but equally, let's recognize things have changed over the last few years. This has not just been the U.S. being more aggressive and being pro-tariff in recent years. China has also been more assertive. China's been growing from an economic and a military perspective as well. And so we've pivoted. We're not in a hegemonic world anymore. This is a multipolar world. You've got two sheriffs in town. That can be a messy affair on occasion. And so I fully expect more frictions with China, not just over the coming year or years, but over the coming decades. This is a constant we'll be dealing with, maybe a little bit less on the tariff front in terms of frictions, maybe a little more on the human rights front or perhaps the environment front and that kind of thing. Likely, at least superficially, more cordial relations, but I still think there are going to be some pretty real frictions beneath the surface. And historically, when we've been in multipolar eras, actually that's been a mild drag on global growth. You get different factions of countries not quite cooperating as they might when you had one undisputed leader in the world, which was the U.S. role for so long.
And as you alluded to earlier, it's not necessarily the person in the White House, but it's the policy that really makes the impact. What are some of the major policy changes we should be paying attention to?
Right. And so much depends on how this Senate plays out and whether there is ultimately a belated blue wave or not. And so I'm assuming not. That seems like the more likely outcome, though, of course, we could yet be wrong on that. And so not a huge amount of legislation seems like a reasonable expectation. And so to the extent work is going to happen here, it will either be on uncontroversial items, of which I really can't think of all that many, or via executive orders. And so that's really been the trick of recent presidents in terms of reinterpreting rules and emphasizing different elements of them. And so on that front, I think you have to imagine there will be a significantly greater emphasis on the environment, maybe a bigger antitrust push. That's already very much in the news, of course. I think you can find a path toward more immigration, a path toward fewer tariffs as well, but probably not the kind of major healthcare reform, perhaps that one might have imagined in a different scenario. And so not a huge amount there, probably not a lot on the tax front. As much as there are aspirations of tax increases, those would be hard to deliver if the Senate stays Republican. Maybe the bigger message and of relevance to markets is, but equally tax cuts probably off the table. And so it doesn't look to me like a 4 years in which we're going to see radical change, but certainly some incremental pushes via, non-legislative efforts.
Eric, it's so interesting what you said, that you don't expect much in terms of healthcare policy or legislation. And it's so ironic. We're going through a global pandemic. Hundreds of thousands of Americans have lost their lives as a result of COVID-19, but we haven't really heard much about healthcare policy. So it's going to be interesting to watch that in 2021 and beyond. And of course, the million-dollar question to you is, how do you expect bond markets and equities to operate under Biden? Which sectors do you think could possibly benefit?
Right. So they've already given us something of an opinion on that, haven't they, in the sense that it seems as though the stock market is quite content under a prospective Biden presidency. We had pretty substantial rally after the election, and markets were pretty comfortable as well over the fall leading up to the election. And so I think more of the same there is a reasonable expectation, I suppose, at the absolute highest of levels. It seems like Biden is bond yield positive, which is consistent with the notion that he is maybe a plus from an economic standpoint and perhaps a plus from a fiscal stimulus standpoint as well. And so from those perspectives, that fairly locked in. Seems like it's a dollar negative scenario as maybe some tariffs come off down the road. In terms of sector specific, I mean, I know there's been some trepidation from a tech and health perspective that if there was the blue wave, you might see some changes that were adverse to those sectors. I don't know that we're going to see much in health, as we've already discussed. I suppose there are some real risks on the tech side, though, of course, there's such a set of other allures to the tech sector. I'm not sure if that holds them down too badly, but there are some new headwinds there at a minimum. And then just don't underestimate from a broader pan-sector perspective, pro-cyclicals, of course, do like good growth, and that was likely even regardless of which president came in over the next few years. And then similarly, multinationals just benefiting if we do see some re-engagement in the world and some fewer tariffs and easier to get those H-1 visas and that kind of thing. And so probably big business beating small business for a little while longer at least.
All right. Thanks for joining us on Trade Talks. Great conversation. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.